Hi everyone. Today we have a very special guest, someone that speaks my language actually, which is analytics. Anna, how are you?
I'm wonderful. Thank you so much for having me. I love people who
Thank
speak
you.
my language.
Yes, yes. Data-driven people are. I hear it's sort of like a buzzword, but it's actually not. It's like a secret cult, I would say.
Correct,
So
correct. It's an approach to the world and how you see things, actually, also.
exactly, exactly. So maybe can you introduce yourself, and then we'll take it from there.
Sure. So, brief little bio. My name is Anna Bozovic. I'm the founder of Analytics Miami, where for the past almost 10 years, I've been publishing long term trend analysis on the South Florida markets. So, speaking of data stuff, I mean, I studied theoretical math and physics actually at Columbia. So, when I approach sort of reports or my outlooks on the market, forecast, speaking events, I approach it all kind of like writing a proof. I take a very empirical approach. You take a logic chain and you sort of construct a case. And I'm saying this now because I keep seeing social media memories of stuff I said in the press 3 years ago, 4 years ago, and so forth. And it's been playing out. It's good to see. So anyway, that's what I do. I was born in Belgrade. It was Yugoslavia when I was born in Serbia. And my family moved to New York when I was 3, which is where I grew up. And then I've been here in Miami for the last about 11 years. So I moved before it was cool. I came on a 6-month experiment, and here I am, still here.
Wonderful. So you are not part of the problem. You were before everybody that came and made it a problem in Miami.
They made it a problem.
Yeah, all the migration towards Miami. Everybody says, "Are you pre-problem or are you part of the problem that made everything so expensive?"
This is
But
true. Pre, long before it was cool.
yeah. So what brought you into analytics and why did you choose Miami to expand your field? What was that like a 6 month period? And what happened?
Yeah, good question. So I had previously not worked on anything that was related to the real estate markets. And so part of my discovery process for staying in Miami links to sort of this discovery of the city. I started learning
Mhm.
about the city. And even 11, in the past 11 years, there's been tremendous change. Skyline looks different even in the last 11 years. You can look back 20 years, even more. But even when I got here, long before COVID, long before COVID fueled the surge that we're in now, I still felt that it was early days. I felt that the city was really primed for growth. There's this great world class airport, which I don't think is appreciated enough. Its proximities. I mean, I grew up in New York City. Going to an airport adds a leg to your trip. It's horrifying. Here, every time I go to Miami International, I'm like, wow, I'm already there. 15 minutes. I'm like, whoa, that wasn't some arduous process. So that's great. There's this world class airport that keeps expanding. You have nature, you have city, you have this very it's very conducive to a healthy quality of life. And I felt that the city was just the time zone's great. It's on the New York corridor. I felt it had all these ingredients to really grow. And I started learning about it. And a large part of any city, of course, is real estate. That's a huge part of the story, how the city is being built. And I looked at downtown. I live in Miami Beach. I looked at downtown, you see the skyline, and I felt as much it had already been built post 2000. There's all this empty land, all this empty land. I grew up in New York. There's no empty land in New York. And you see all these lots with great zoning with empty land. And I said, wow, so much is coming. So I kind of started learning about the real estate space, meeting developers, meeting people involved in the space. And it kind of, well, it's what I decided I wanted to be in real estate. It's a funny thing. I'm a broker also. So when I talk to clients or talk to anyone, I consult with developers and I work with clients on acquisition. So whenever I talk about something, I feel like I need to know about it. I don't like to make things up. And well, especially residential real estate, not to cast aspersions, but I would say that over 90% of people are just making things up to a level that still horrifies me. And I come from a science and tech background, and so it took me a few years to understand the magnitude to which nobody knows what they're talking about. It's like I'm not used to that. It's
Yeah.
not commonplace elsewhere. So when I decided that I wanted to be in this space, I started to download raw data from the MLS of the whole market, parse it, chart it, for my own understanding, because I needed to know where things were. Everything obviously was in a cycle. I needed to know how things were trending, what the supply and demand interplays were, so that I could have confidence in what I'm thinking and saying and advising people. And then I had a friend who's sort of a mentor. He said, wow, this is really interesting. You should publish it. And I remember I said to him, I said, why? It's such easy, obvious data. It's not even interesting. He said, just because it's obvious to you, it's not obvious to everybody. And so that's kind of how it started.
And it's super interesting what you're saying because I feel the Miami real estate market is one that defies gravity somehow. how do you see it on a data driven approach? Is it something that you're like, well, these are outliers after outliers, or does it make sense data wise?
What's happening now in the market makes sense. Inventory levels are still, without any segmentation, are about 30% below where they were pre-COVID. And obviously it varies by segment, but overall we're still far below pre-COVID. And transaction volume at anything but lower price points is significantly higher than pre-COVID for a variety of reasons. One, inventory dropped off enormously at lower price points. And then we have this wealth and talent migration that's very real. So I think that it's really that domestic wealth migration that's created this surge in our market that started during COVID. Because that surge started in the absence of foreign buyers. They weren't coming during COVID. And Latin American buyers didn't all of a sudden decide Miami was bad. They're coming back. They just couldn't then. So the surge really started because of the domestic wealth and talent migration. And I don't think that's reversing. I think really that's what's fueling the future of this market. So I don't think it is, I don't think it's, defying gravity. So there was a study published by UBS a few weeks ago about bubbles. I don't know if you've seen it.
Mm-hmm.
And they said they used Miami as the headline of the clickbait. They said,
oh, of course.
Yeah, they said Miami's the bubble. And they had this whole report, and it seems that they defined bubble solely based upon rapidity of price appreciation. And it's not true. That's not how you define a bubble. Other conditions have to exist. Bubbles usually pop when the underlying assets can no longer sustain the debt. And then you get the house of cards collapses, like we saw in the real estate crash. So that isn't the setup at all. We have neither high usage of debt, let alone irresponsible debt, nor do we have inventory at high levels, especially at the high end. In fact, the market is built on cash at the high end. At $1 million, condos are 72% all cash. So where's the bubble? They were using it as clickbait. So, but I think like it's people's minds haven't shifted to the fact that Miami isn't right now. It was in the past being driven by some, just get your money out of the country kind of remote investor, Latin American thing that it was in the past, or drug money in the 80s, whatever it was. So it's a new phenomenon that we have this domestic wealth and talent migration, that people are coming here not to hide money, not to retire, not to do shady things, but to live, work, and create. That's a new phenomenon. I think that people haven't adjusted their minds around it yet.
And it's sort of like, I 100% agree with you. And that's why I said you talk my language, because everything else can be emotional. Everything else can be like, oh, Miami is known to be greedy.
Mm-hmm.
That's something that you grow up knowing, that Miami is always going to be greedy. It's always going to try to chase the highest price. It's going to try to compete with New York. It's going to try to compete with the skyline, with the prices, with the condos. And usually we don't perform. But this time it seems like Miami is like in a renaissance. And I actually think I moved here about 3 years ago, and maybe like 1 week or 2 weeks after I moved, the Financial Times published that they think that Miami is going to be the most important city in the U.S.
Yep.
And I agree with them.
I do too.
And this is incredible to hear from your side, how it's when people think like, how can this be sustained? You're like, because all the elements are here.
1,000%. Where did you move from?
I'm half Ecuadorian.
Oh, okay.
And half Persian. I grew up a little bit. I was lucky enough to do a little studies all over the place, but then Miami became home because it's like the land of, I feel the energy of opportunity, and especially what you just mentioned. Like I made a joke at the beginning, the part of the problem, but also part of the surge of people that came here to see like more opportunity, and they feel the energy. And I've only met interesting people and people doing incredible things. And whether it's, yes, the Latin American that said it's too dangerous for me to live in wherever, so I live in Miami and I can have a better lifestyle, but that person is working here.
Yeah.
They're not
part of the talent migration, actually. That's different than someone just buying a brick or condo to deposit money. Those are people moving to live and work here and be part of the community.
Correct. So it's actually incredible. How do you see data bias, or how do you segregate not trying to like prove something, but actually having more like a scientist approach of saying like, okay, this is the data, what is it actually telling me?
Yeah, so I try, so every quarter I do extensive or kind of macro reports of the whole market. In between, I'll dig in if something looks interesting to me, or if there's an article, a reporter asking something. So when I do quarterly reports, it's very systematic. I do the same thing. I just look at segments, supply, demand, pricing. So my thoughts or bias doesn't affect how I chart it and look at it. In fact, before COVID, when our luxury market, condo market especially, was imperiled, when there were very, very high levels of inventory, I was the only one saying so. I think people were mad at me. I was in the press for saying that. When we had 40, 50 months of inventory in Sunny Isles, whatever it was, the press was quoting me all on that. And I was the only one saying it. So I take the same approach. You chart the whole market, chart the cycles, dig into various segments, see, so I do that. But one thing that I will do to sort of see, okay, so if we're talking about this wealth and talent migration coming in, and we want to figure out where do we see it in the market? Where do we see the effect? You have to get a little bit creative, not in a bad way, but you have to segment effectively. I'm not manufacturing data, but you have to segment effectively to see where this flow of domestic money is going, because the high end of the market is very small in comparison to the rest of it in terms of transaction volume. So when you report the whole market, the action at the high end gets lost, because obviously half the market transacts below the median, and then the very high end is a tiny portion. So one thing I've been doing recently is charting sales volume on a price per square foot basis, and this is where it gets very, very interesting, because at high prices per square foot, for example, for single family, past 2,000 a square foot, we're up 850% Q1 through Q3 now versus 2019. So in that, similar for condos, they're up about 400 some percent, I believe. So those segments of the market have the most extreme before and after divergence spike that we've seen pre and post COVID. And that to me is an indication of where these people are being channeled from New York and so forth. So I do the whole thing agnostically, the whole market, but then I will segment with a purpose to see which pieces are behaving interestingly.
And you mentioned with this data, you're a broker yourself, but you consult with developers. Can you tell us a client win, something that you felt very successful part of your analysis?
Oh, okay. So most developers need help figuring out the pipeline, the pre-construction pipeline, what's happening, what's coming, because projects take time. You have an idea today, it's not going to get delivered tomorrow. So you have a window, depending where you are in your process of the land, the permitting, the actual construction period, the sales, all those things. So you have a time horizon, and you have to figure out the product that you deliver will be at a certain price range. And you have to sort of figure out, extrapolate what demand will be at that price range X years out. What else is in the pipeline coming in that will compete with you in pre-construction sales at that time period? Where is just demand going to be for this price range or unit type, whatever it is, your property type that you're making? So what do I like without reviewing too much? So I think that I've had great success in advising people on how to target what I would call in-place demand. I'm sorry, end user demand. There's a lot in our pipeline for condo hotel, and there's a tremendous squeeze for end user product. And this is shown in the disappearance of single family homes. So it overlaps. One shocking statistic is that in Miami-Dade County, below $500,000, active listings for single family homes are down 86, 87% versus pre-COVID. It's just gone due to many factors. And so anything in the pipeline, because of cost of land, cost of construction, all those things, there's a lot of expensive stuff in the pipeline. So we're talking about end user product. People can live with their families that you can't rent nightly. Your neighbor can't be a hotel, things like this. Especially in the urban core, there's not much in the pipeline. And any single family that's being built within proximity of the urban core tends to be very expensive. So things that are new and that could be targeted towards. So most people don't appreciate the enormity of the situation, actually. Even when I show them charts, they're like, wow, it's a colossal squeeze. So I've had success with it.
And let's go the opposite route. What do you feel, or what do you see investors making the most mistakes by not using this type of data?
Where do I see investors making mistakes? Well, point number one, believing headlines in the news. I've seen I've posted this, just complete fabrication in the press to a point that's, really negligent, like criminal. I don't know what it is. It's not even words being wrong, where you could say, oh, misunderstood, whatever. No, they're printing actual numbers that are complete fabrication. It was Newsweek, Business Insider. I wrote about this. They recently wrote something saying asking prices down 12 something. That was like a specific number, even with a decimal, 12 point something percent. And the whole thing is made up. They're up year over year. They didn't even say if it was single family condo. It's irrelevant because they're both up year over year. The whole thing was completely made up. And a lot of mainstream press is using Miami as the clickbait. And they're conflating what's happening in the rest of the state of Florida with Miami, or they're just not happy that Miami is prospering post-COVID. There's some identity politics going on. For example, the author of that article I mentioned, Business Insider, she had actually messaged me on LinkedIn a week or two before the article came out. And she says, hey, I write about real estate. Do you have any data? And I said, why, yes, I just finished, Q3. Here's my 20-page report. I sent it to her. Never answered me again. They published this article, which is complete fabrication. I wrote their entire editorial board. Nobody answered. Nobody cares. They can do this with impunity. It's quite amazing. So it also makes you wonder, I caught this because I'm an expert in this little topic. So if they can lie with no recourse about this, what else are they lying about? It's kind of incredible. So I would advise people to not look at the headlines pretty much at all, because I have very, very little trust in them. And to, when they're thinking about making an investment, recognize the segment of the market they're looking at, because we have segments behaving very, very differently. So people make mistakes when they think that the market is behaving as a whole. We do have a divergence in the market. Old inventory is behaving very differently than new inventory, because the incoming wealth and talent migration, they want new stuff. They want solutions. They're not buying old stuff. So the old stuff is having challenges. It's not benefiting from wealth talent migration. They have that new law coming in, whatever. So just be aware of the segment that you're buying into, and don't believe the hype in any segment, actually. So just really, I think people make mistakes when they don't get specific enough in looking at the dynamics of what they're buying.
Love it, love it. I always say the news sells news. It doesn't sell information.
Yeah, what did Elon say recently? He said it's a click maximizing machine, not a truth maximizing machine.
Absolutely, absolutely, and you see it over and over again. Like, we were gonna hit with the worst hurricane ever to exist, and then it was a light breeze in Miami, and unfortunately, it was harder in other areas in Florida, but it wasn't.
It was not a
like,
biblical event.
It was not. Yeah, it was like this train coming towards us, barreling down, and we thought, okay, everybody's scared, and then. And like you're saying, going more to like real estate, I've had calls because what I do is I help investors, entrepreneurs, international people invest into real estate. And I try to find them the best deals possible, syndicate them, add institutional quality stuff, give them access to institutional quality stuff. And I've gotten calls of people saying, like, is Miami '08 again? Is it
Exactly.
completely, has it tanked? I'm like, actually, I think it's buzzing. And if you come here, and if you live here, you see how much movement there is. And this is like one area of the city. I'm in Brickell at the moment, which is like maybe it's a four street like like corner. But if you go to the outside, you see cranes and cranes and cranes and cranes. And I really like what you said about the delay of vacancies. Like, when there's low vacancy, there will be a lot of construction in the pipeline. There should be a lot of construction in the pipeline. If you don't look at that,
Great thing.
you might be wiped out when they start delivering. You're like, oh, but I thought this was a high in demand place. It's like, yeah, everybody saw it too.
Exactly.
And what brought you to math? What specifically math? What does math speak to you?
Oh, so okay. Honestly, I hated school. This is the honest answer. I felt that most of it was an abject waste of my time, and I was just good at it. I like it because I'm just naturally very good at it. I like doing mental exercises. It's fun for me. I studied, at Columbia, I studied very abstract space-time physics, modern geometry, topology, tensor, all that weird stuff. And I like it. It's like fun for me. It actually, it's kind of like meditation. Now I'm gonna sound totally crazy, but this is it puts me in a happy. It's like I'm a jujitsu addict. Actually, also I train like 2-3 hours a day. It's the same type of thing. It puts me like in a meditative like flow state thing. I like it, and I didn't like anything else in school. And I went again. I was very lucky. I went to a small private school. In retrospect, they were very good to me because I think I did as little as possible, like as a policy. And I took my SATs cold. Like I did as little as possible. I really felt. I remember in the 10th grade, I decided I didn't want to go to school anymore. I had a psychologist. I told him that it was a complete waste of my time. Like, why are they keeping me in kid prison? It's boring. Can I just take a test and like be out? I remember Dr. Cohen, he looked at me, he said, you know what? He says, you're right. And I was like, oh, I had like, they put it to a psychologist before that and they tried to argue with me, but I didn't. I thought they were wrong. And this guy was very smart. He said, you're right, but that's just the system. Something we can do about it. So just do the bare minimum and get through. And I'm like, Ah, that makes sense. So that's what I did. And the math, I just always found it fascinating. I liked it. My only fond memories of all the time that I spent in school, where I felt it did not really waste my time at all, where I gained a lot, was remember one professor, Dr. Spiegel at Columbia, was a special relativity. He was a genius. He's one of the seminal figures in modern relativity theory. So guys like that, because they teach you how to think. Going back to that, most people, like, school pretends to teach you what to think, but does not teach you how to think. And how to think is the most important thing. And guys like that, courses like that, where you take a whole lot of n-dimensional chaos and you have to construct a thesis around it or logic around it, that teaches you how to approach any topic, really, or create anything you want. And then also, I've had the great luck of having great coaches. I'm a very good athlete, so I've always had access to world-class coaches and guys who are real geniuses of mindset, like great fighters, all these things. And so it's a very similar kind of mind space. But the rest of school, I hated. And I'm
Yeah.
right. In retrospect, looking back at it, what I said when I was 15, 14, I was completely right. The whole system is ridiculous. It's a waste of time. It's just geared around mediocrity and keeping kids in chairs. It doesn't correlate to success in life at all.
Yeah. I definitely have a beef as well with school in terms that when you grow up, they never taught you taxes. They never taught you how to balance your home. They never taught you about that.
No, no.
Like
Or even how to
all these
figure out
things
what you
that,
really want to do with your life. Like, what are you actually good at? What do you want to do? It's like everyone's putting this little hamster wheel in like chairs and you're all sitting there in rows being fed the same thing, but we're all different. And I think it just like, it kills kids' creativity and individuality. I think it's kind of criminal, the whole setup.
yeah. Well, I think like you had good mentors. I think the system is built for A to Z to try to encompass as everybody, and then you just have to find your place
Yeah,
and differentiate yourself and use it as a fuel to, like, okay, in life we don't always have to do everything we like or we're good at, but we also have to deal with traffic, for instance, or brushing our teeth or whatever it is that you think is, maybe not the highest best use case of your time, but also you have to do it. So, but I 100% agree with you that there's a big delay between innovation and what education is being given. Like, no one is talking AI in schools right now. It'll be years until the curriculum can go into coding, for instance, and it's been like years in the making of people that the most paid jobs are in coding, the most demand jobs are in coding, and they teach kids in India coding, but they don't teach American kids
correct.
how to code until you're like 23,
Yeah,
perhaps, or 22.
yep, exactly right.
So very interesting. Let's go back to like investing, and what is your philosophy of investing? How do you see it?
Well, okay. Within the context of real estate, I always tell people that, obviously every situation is different. People have different everything. But a basic premise is that, or a starting point is that it's always good to align with inherent scarcity and align with the growth of the region. If you can align with scarcity and growth, then long term, that's a good place to start.
Can you give an example?
Sure. Um, okay. So for an individual investor, on a very basic level, here in South Florida, if we believe the thesis that the wealth and talent migration will continue and that Florida and South Florida and Miami will continue to ascend, which I do for many, many reasons, um, then we believe that people will continue coming here to get jobs, do all those things, et cetera, et cetera. The city will continue to grow, will continue to build. Well, what we're seeing happening in the market already, and I think it's still early days of this phenomena, is a divergence between the behavior of single family and condos. Single family, I mentioned slightly on this before, single family within proximity of the urban core is at all-time highs again for the month of October, which closed out. Simply put, we cannot add more inventory vertically. We can with condos. Single family, we cannot. And as all the new office gets delivered, we have 2 million square feet of Class A just between Santander and Citadel. But there's more coming, right? As the region continues to grow, people need places to live. Single family, we cannot add more. So single family within proximity of the urban core, I think is a very, very safe play for an individual investor because it's aligned with inherent scarcity. We can't add more of it at all. And it's aligned with the continued growth of the region, job creation, so forth.
Yeah, yeah. And how do you see this is like, and agree with you, the scarcity is number one uh, KPI that we look into. It's always like what's the vacancy? Where are we in the real estate cycle, which is very hard to determine, but it's something that we try to look at. And then permitting is a big one for scarcity too. Like, is this an irreplaceable asset? Is this something that very hard to do? And agree with you that could be a very interesting play. But there's a lot of people that now are faced with, like, natural disaster in Florida has become a incredible pressure into insurance and insurance cost.
Yep.
How do you factor that into your analysis?
So I think there are still unknowns around how the insurance costs will be handled, what the solutions will be moving forward. I don't really have the answer. I don't think anyone does. I'm optimistic that there will be some sort of viable solution, that it's not going to continue getting worse. And whatever sort of foreboding effect this is having on the market is not being reflected in actual activity of people. So it's either being discounted or people are assuming there will be a solution. So I'm generally, I don't know. I think it will be figured out, is what I'm trying to say, because the prospect of the insurance situation getting worse and worse hasn't dampened buying activity as it should have if it was a certainty.
Well, I think that there are many people getting crushed by insurance costs being 20-30% higher than pro forma. Their inflation, this is something that I hate, is rule of thumbs. Is like, I have a pet peeve when someone says the rule of thumb is, I'm like, let's that rule of thumbs are for amateurs. But if you're looking for a professional investor, you need to dig a little deeper in every single assumption, and then growth rates of every single assumption can't be 3%. Like, that just doesn't cut it for a more sophisticated model. And this is something that I've always been like, okay, we can't do 20% either, because we couldn't buy anything. So where is your, like, confidence interval? Do you do a decision tree, or how are you managing these type of problems inside modeling, where you see that, okay, I can't keep growing this to infinity because no investment is going to make sense?
Correct. I don't have a good answer for you. It varies by project. I don't have the answer. And I think it's such an unknown. And I think that developers I work with, builders I work with, buyers I work with, I don't say they're discounting it, but it's like everyone's proceeding as if it will be okay. But I agree with you. People are people whose costs have gone up, who can't bear the burden. They're getting crushed. I agree with you 1,000%. What I meant is that on net, it's not dragging the market down.
And that's what I meant with, is gravity not affecting Miami? Is it gravity not, like, this is a real
100%.
problem?
It's a very real issue. I agree with you, like 1,000%. It's a very real issue. Yet at the same time, when you look at assets on net, they're not being pulled down. That's the other reality. So how is it being accounted for? I don't know. Is it being accounted for? Yeah. Because it's not dragging the market down. The prospect of it, or the reality of it, is not dragging the market down.
Yeah. And how do you suggest, like, I love that you use the word thesis, because it indicates, and I talk about this a lot, about having a more scientific mindset to investing, instead of having like trying to pontificate, like, oh, it's always going to go up, or it's always going to go down, or it's too expensive, it's too slow. Like, that's, to me, is like pontificating or acting in faith.
Right.
And that, or the contrarian, like, of course there's cycles and it's going to go down. It's like, yeah, but what does that mean? It doesn't mean anything. How do you approach a thesis that doesn't work, that you say, okay, I think this is going to, how do you change, what variables are the ones that are like non-negotiable changes, and what are the ones that you're like, okay, I can see this differently?
You mean as you evaluate data on an ongoing basis, like you have a thesis and you're evaluating stuff? Okay, so I actually have no issue with saying I'm wrong. I'm not attached to it. So if there's something that comes up there that's wrong, that's wrong. But having said that, when it comes to real estate, so I mentioned that before COVID. Okay, so I mentioned that before COVID, we had sections of our market that were not doing so well, and I was pretty much the only one saying that, much to the chagrin of the rest of the real estate market here. But COVID was this cataclysmic event that we cannot account for, right? Nobody could have accounted for COVID. So COVID wasn't quite a black swan event, but it was this event that happened, and it changed the market. And we have a market that's after COVID, post-COVID, and pre-COVID. So in this post-COVID market, what would I need to see to change the thesis? It would be changes to the fundamental drivers of what's happening. So post-COVID, our fundamental drivers, one of them is the wealth and talent migration, which I think will keep coming. So if we were to see a reversal of that, that would hugely affect the thesis, because that's one of the main points of the thesis is that Miami and South Florida will continue receiving high value taxpayers, not just immigration net, but net high value taxpayers are moving here. If that changes the thesis. If we see a disappearance of cash buying and all of a sudden there's a lot of leverage in the market, that changes the thesis. If we see crazy spikes in inventory, that changes the thesis.
Wonderful.
But I've not seen those things. And I don't, okay, then the migration thing, I don't think that's going to change because, I actually, I contributed to an article, it was in the Daily Mail a few days ago. They had found a chart that I posted. So the census releases raw migration numbers, interstate migration numbers once a year. They released 2023 about 2-3 weeks ago. And it's on their website. You can download all the data, whatever. So I downloaded it, put it in tables, and you can do a calculation for, line up all the states plus District of Columbia, and you get net loss, net gain, right? So great, did that. And then you can rank the states, obviously, by raw population, gain or loss. And then I said, I'm going to add a column. And in that column, I put the top marginal income tax rate for that state. And then you see a very, very strong correlation. Obviously, Texas and Florida were number one with 0. And then the biggest losers, again, were New York and California with over 10%. And if you take the averages of 5 and 5, it's a clear correlation of tax rates. That's how the migration is going. I then made another column for governor, Republican or Democrat. I'm a registered independent. I dislike all parties pretty much. I'm kind of pragmatic when it comes to politics. But I made this column, Republican, Democrat. 8 of the 10 states that gained population had Republican governors. 9 of 10 that lost had Democrat governors. So the correlations were very, very strong. And so I published this chart. Someone in the Daily Mail found it. They called me up. I gave them the data. They made a map with my thing, And a comment that I made to them, they quoted me on, was that I don't see this reversing. I don't see a massive net migration back to high tax states. Why would there be?
Right.
The country is reshaping. People are using the internet to work. That was accelerated post-COVID. And so why all of a sudden would we see a massive net migration back to high tax states that were high lockdown? I don't see it.
I was in New York a few weeks ago and I learned this new term, which is like halfway back, which is people that came all the way to Miami and said, it's maybe too expensive. They were priced out because they thought, I'm going to be a king there. And it's not necessarily the case. It's actually,
right.
Yes, your dollars go further. It is better, but you do need a car. It's a bigger space. It's just a different lifestyle perhaps too, that a lot of people are going to the North Carolinas or like halfway back. How are you comparing the Miami market to other states or other cities? Is there like a second Miami out there?
So I don't know. Yeah. Okay. So one point that I've been making is that I think that this sort of 21st century mix that was accelerated post-COVID, right? So New York was established in the 20th century before the internet as the center of the world, center of commerce, and so forth. Nothing lasts forever. Something else will emerge as the new point. And I think that in this post-internet world, post-COVID world, it's going to be more multipolar because it can be. Because a significant percentage of the population avails themselves of remote work or partial or whatever it is, right? So I think that this new reality, this new 21st century reality is going to be a more multipolar one. So it makes a lot of sense to me that I even hate the word secondary. It sounds almost like demeaning, but these other cities are also benefiting from the migration. It makes a lot of sense. So North Carolina is one of the states getting it. I've even heard, hear articles about the growth of Boise, Idaho, all these different places. So there isn't one that pops in my mind, but I think it will be very much so a more multipolar reality moving forward, which makes sense.
Yeah. And I think it's going to be more like you can find your own way. And I think New York, for instance, you mentioned, people went there. I don't think they went there. They were brought there because of the job demand. So it wasn't people that actually wanted to live there.
Right.
They were not forced, but that was where the opportunity lied. Now that there is a little bit more freedom, perhaps, of choice of where to live, Boise, Idaho seemed amazing. How do you see work from home, though, and the reversal of work from home, which is now happening with tech companies saying, hey, guys, you're not doing anything. Come back to the office.
They're saying, haha, nice try. We see you, right? Playing with your cat. Obviously there was a spike immediately during COVID. It's not going to stay at that maximum level, but the point is that even if 10% of the workforce changes its behaviors because of work from home, remote work, at scale, that's enormous. And the percentage of people with hybrid or remote work, I think, even though it's going to, like, there's like a snap during COVID, so it's going to come off that high, but I think it's still going to remain, statistically speaking, significantly higher than pre-COVID. So again, even if 10% of the population makes that change, it's very significant. That tends to be the population that's a net payer of taxes, and they're more mobile. So I think it's going to come off the immediate highs of post-COVID, but it's going to settle around some level because or hybrid or whatever it is, it's different than pre-COVID, which we'll see we'll see how it shakes out.
What's going to happen with that inventory, though? What are your predictions, or what do you think is going to be the ultimate drive to? Because Miami is the only city that has that massive growth of office. The rest are trying to offload office and actually don't want to touch it with a 10-foot pole. What's your view?
So Miami didn't have that much Class A before. That's also the thing to take into account.
Yeah.
So it's building from a low basis point. I mean, Santander Bank, which is living a lot, they're going to fill their own building. Citadel, we didn't have a lot to begin with. That's also why we're building. So,
yeah. And I actually heard that like Amazon wanted to get like 40,000 square feet and they couldn't. Like it was just like there isn't that much inventory.
The older buildings don't have large floor plates. It's a whole thing.
And I do believe that Miami does have a, like you said, a good time zone. It's like the sixth borough of New York. It's kind of very connected, and the connection to Latin America is super important. How do you account that migration trends? Because like the U.S. is very clean data, and if I know anything about statistics, is that data cleaning is 90% of your models, or there's just the work that goes into that is tremendous. How do you see data? Where is your sources? Like, how do you clean them? Which one are reliable? What can you recommend
for migration?
For most data points and for migration, yeah.
Okay, I mean migration census data. There's census data, and there's also IRS data, and there's also license plate exchange data. And so they're put out by different organizations. If they line up, they kind of corroborate each other. So, yay, that's good. And then those are the big ones. There's I tend to trust those. And then there's airport data. The airport publishes data on international domestic flights every month, every year. They publish that, and that's also a good indicator of inflow into the region. Then you have all sorts of data on multifamily occupancy, hotel market. A lot of organizations put that out. And then, of course, the real estate markets for residential, most of it, almost all of it's in MLS. So I just do raw exports every month, and you chart it, you look at it, and see what happened. You can also use tax records for that. So, listen, the data sets. This is why I thought it was not interesting years ago, because I used to more complicated data sets. They're not that complicated, really. It's just a question of, can you isolate for what the driving forces are and how they intersect, and really, what are the driving forces? What's driving the momentum of the markets that you see around you? What's your thesis? Is it going to continue, and how do you quantify its continuity or lack thereof? Because anyone can tell you the median price for a single family home is whatever it is now, 640, whatever. Anyone can tell you that data point, but a data point by itself is just a snapshot in time. It's not that interesting. You have to figure out how it interplays with everything else, what's driving that curve, where it is in the cycle, all that stuff.
Yeah, absolutely. And then talking about like the future of analytics and where big data now is maybe a too used term. It's an old term now. Machine learning now, AI, neural networks, all that good stuff. How do you think that's going to affect in the future? Is it going to make the market more efficient, or is it going to give an edge to the people that actually use it? Or where do you see that?
So the residential real estate markets are incredibly inefficient, in my opinion. I mean, okay, market's clear, right? So there's always some baseline efficiency. Stuff is bought and sold. What I mean by inefficiency is the friction with the operators, the people involved in the space. You have individuals selling properties that are sort of attached to, sort of not. It's they're not quite businesses. It gets muddled. You have agents, many of whom don't know anything. So those are the real, what I would call, friction points in the residential market. Commercial's better because you have a more sort of professional setup. But will AI help? I mean, ultimately, I think AI will make everything more efficient. Just exactly how remains to be seen. Residential real estate at the high end is very, very low tech, so I'm not sure that what the effect there will be, because high end clients just want their hand held and they want to talk to an expert. It's not about efficiency. At other points in the market, yeah, I would imagine so. I mean, we've already seen what efficiencies, Zillow has added, even simple things like that didn't exist before. So I think AI will make everything more efficient. It's still early. We'll see.
Yeah. I actually love that you said Zillow, because that was like one of those royal screw ups that the Z estimate was completely fabricated. It was a model that only knew growth, and made them buy in their own zip code
I
wrong.
know. It's amazing.
So I think that that's like war stories for how analytics, I don't want to say needs to be taken by a grain of salt, but I think it really needs to be understood.
Yes, 1,000%. 1,000%.
And I'm more of the camp that it's not going to make it more efficient. I think certain things will be more efficient, but this is a market, like you just said. There's emotion, there's sales between friends or between family that's going to be like, hey, I'm going to sell it to you at below market price, and that screws
You're
your
right.
whole data set.
Yeah.
There are people that overpay because they have different motives. Like when someone says, why would they build a $50 million condo in any tower? And you think, because someone wants to pay for it. Like it just doesn't make sense. In the data set, you'll be like, that doesn't make any sense. It's way above
Fair.
anything we've ever seen. And it's the same elevators, it's the same amenities, it's the
I like
same
the
everything.
king. He likes those. Okay. Right. But no, but yeah,
Exactly.
exactly. He just sold, it was in the news today, he sold his Chicago penthouse at a 40% loss.
Yeah, I saw your post on
Yeah, poor guy. Like he has this thing of buying the most expensive property in every city that he spends time in.
I think, do you think it's like a question of like money becoming not an issue, that you kind of lose the ball there?
Oh, and like a guy like him doing stuff like that. I mean, he also
Yeah.
bought the two penthouses at Vienna in Miami and never lived in them and sold them at a loss too. He never lived
Yeah.
in them. They have like
And
60
this
million
is
dollars.
interesting, because it's something that I say that, you can be the best, you can be the best businessman, you can be the like biggest hedge fund in the world, yet it doesn't translate into real estate. It's like trying to get a basketball player to be the best swimmer or the best
Yeah.
baseball player. It just doesn't, it does, it's a different skill set.
I think it just makes him happy to buy them, honestly. Like it doesn't affect his net worth, obviously. I mean, Ken Griffin spending 60 million is like, not that it's nothing, but obviously it's not hurting him because he keeps buying them all over the place. Right? And he has a compound in Palm Beach, and probably it just brings him joy. I think that's where he is in his life. He wants to go buy the prettiest, shiniest penthouse in every Be King in every city, or the biggest waterfront assemblage in Palm Beach, or whatever it is. It probably just gives him joy at this point. And I think that when you have so much money, look, I think that actually for any of us on a real baseline level, all that we own is our time. You can never get your time back. So how you spend your time on this earth is really your most important decision. And when you have essentially infinite money, which is what he has from all practical purposes, then I think that further distills down that point. Like, what actually makes me happy? He doesn't have to do anything
Right.
for the rest of his life. So if it makes him happy to buy the most expensive penthouse in City X, like he just does it, I think. That's
Yeah.
fine.
And taking a loss isn't a problem either. Like it's not, and that's going again to like following the news and not really the information, perhaps. Like it's just like it's news, but it's not information, because like you're saying, it might, his viewpoint, and this is what I like about investing too, and decisions, it's very personal. Everything, most things in finance, or everything in finance, is a social fabrication. So the way that I see something might be completely different than another person.
Okay.
It doesn't mean that either of us are wrong or right. It just means that we see it differently.
Exactly.
Well, it was wonderful having you here. Definitely learned a lot. I will rewatch certain things to capture them again, because I think you said a lot of golden nuggets. So everybody that's going to listen to this is definitely going to find value. I like to end podcasts by asking you what motivates you or what inspires you in the work you do today.
So going back to what I was saying about the decision that we make and how we spend our time on this earth, I get kind of existential about this. So we never get our time back. For our current knowledge, we're here once on this earth, and so I think that we're all placed on this earth baseline to be the brightest versions of our unique selves. This goes back to my comments how I think schools curtail creativity. So I think we're put on this earth to be the brightest versions of our unique selves, and I think that connects with being your best self every day. How do you get better, a little bit better every day? And this connects to what I do in training, jujitsu, what I do with everything. How do you optimize yourself and be your best self every day and deliver value to the world in a way that ties into your natural talents, because we all have them. And that's kind of the approach that I bring with what I do.
Love it. Love it. Great. Great answer. Thank you again for being here.
Thank you very much for having me.